As a trader, we all look for tight or low spreads, which helps us to get in and out of the market. Using the right broker can help us try different strategies. With multiple options of brokers on the web, here at Stock Sniper Trading, we have a recommended broker, that is, HankoTrade. With spreads as low as 0 pips and leverage up to 500x, HankoTrade is just one click away. With multiple account types to choose from, you also have a minimum deposit of $10. Using HankoTrade's affiliate program, refer a friend and earn up to a 40% commission on trading volume. Built by traders, for traders. HankoTrade.
Welcome to Stock Sniper Trading. In today's tutorial, we will be going over the bearish pennant continuation pattern. A bearish pennant pattern can be identified often on charts that occur in a strong downtrend. They are called bearish pennant patterns because they resemble a flag on a pole seen on charts and can be called bearish pennants depending on the downtrend. The typical features of the bearish pennant pattern have a pole which is formed by a strong downtrend on high relative volume. After the price consolidates near the bottom of the pole on lighter volume, forming the pennant, the price breaks out on relative higher volume to continue the downtrend. Pennant patterns can be used in momentum trading and can be used on any candlestick time frame, especially the 15-minute frames to scalp short-term price movements. The pennant pattern is identical to the flag pattern. However, the only difference is in the consolidation period where a flag has parallel trend lines and the pennant has converging trend lines. In this example, we can see that we have a bearish downtrend, which is represented by the bearish pole on high relative volume. After we find some support, we begin to consolidate in a pennant flag with converging trend lines where our upper trend line is descending and our lower trend line is ascending. We're making higher lows on the bottom while making lower highs on the top. Eventually, the price will converge and meet at the apex of the triangle where we should get a further breakdown on higher selling volume and continue the bearish downtrend and making new lower highs and lower lows. The bearish pennant is a continuation pattern. Pennants are formed from a downward flagpole, which is our bearish move. It is seen as an area of consolidation before the breakout pause. Descending trend line and an ascending trend line, which are converging, are the characteristics. It has at least 2 lower highs and 2 higher lows. And a breakout should occur at the apex. In the diagram, we can see that we have a pennant forming where we have converging trend lines, where we have a descending upper trend line and an ascending lower trend line, where they meet towards the apex of the triangle, where we should get a breakout to the downside and continuing the bearish trend. We have to monitor the volume as the selling volume will pick up towards the apex of the triangle and the buying volume will decrease. We will get more sellers entering the market and continuing the existing downtrend, and we should create new lower lows and lower highs. This is an example of a bearish pennant breakdown, which is a continuation pattern from our TradingView charts. And in this particular example, we are looking at XAG USD, and we are on the 120-minute time frames where we're looking at 2-hour candlesticks. We have a bearish downtrend, which is our flag pole. B, we have an ascending trend line where we find some support and we're making higher lows on the bottom. C, we have our descending trend line where we have price action making lower highs. And then E, we have our bearish breakdown where we get our continuation to the downside. When we break our support level, we have an injection of more selling volume and we continue to the downside, making lower lows and lower highs. And this was all identified by the bearish pennant breakdown and knowing that it is a bearish continuation pattern when we break below the support line. This is the example of the bearish momentum coming down, which is our pole. And eventually we do find some support where it is the ascending lower trend line. And eventually it makes it to the top of the pennant where we continue to make lower highs, and eventually the buying volume decreases and the selling volume will increase where we get more bearish candles. And once we break through the apex of the pennant and we break lower support lines, we should see a momentum to the downside and another bearish continuation making lower lows and lower highs. So this is where we get our breakdown. We have our red candle, which closes below the support line, and we get added bearish candles continuing to the downside. And this was all continued from our bearish momentum. Quick recap. The bearish pennant is a continuation pattern. Pennants are formed from a downward flagpole, which is our bearish move. It is seen as an area of consolidation before the breakout is the pennant. Its characteristics are it has a descending trend line and ascending trend line on the bottom. And these two trend lines converge together to form the apex. And we should see at least 2 lower highs and 2 higher lows in the pennant. And when the breakout occurs, we should see continuation to the downside and more bearish momentum and volume continuing to push the price down and making new lower lows and lower highs. We hope you enjoyed this tutorial on the bearish pennant continuation pattern. This will wrap up our continuation patterns, and on our next tutorials we will introduce the reversal patterns.